Good afternoon, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we just got the PPI data out. That is Producer Price Index. It's basically the inflation numbers on the producer side. So what are the producers feeling in terms of inflation from tariffs? Let's take a look at those numbers. Again, at the bottom of your screen, you're looking at 0.00% versus 0.2% expected. So lower inflation month over month. Year over year also was lower at 2.3% versus 2.5%. If you go to core, which remember subtracts out food and energy, you're looking at 0.0% as well versus 0.2% expected. And core year over year, 2.6% versus 2.7% expected. So listen, these numbers across the board are very positive for inflation, meaning that it is lower inflation. This is not a concern, at least on the producer side. Yesterday, we saw CPI data, which wasn't as good as this, but it wasn't abnormally crazy either. So listen, we have these tariffs. Obviously, the can's been kicked down the road quite a bit in terms of imposing them, but there's been the standard 10% that's been imposed on pretty much every country. And so far, we're not seeing a major jump in inflation. And that, again, is positive for the stock market. All right, let's take a look at the charts here as we delve into the action here, guys. Let's take a look. We'll go full screen on the chart. And what we can see here, guys, is that on that PPI data, the S&P futures did make a big move to the upside. Again, pushing up. We were slightly negative going into the data this morning on the S&P. That has now turned around and we are slightly positive. Just to show you where we closed yesterday on the ES here, right down here at around 62.82. And we're currently trading at 62.95. So we're about 13 points up on the day. That equates to about $1.30 on the SPY if you're following the S&P or the SPY. All right. So a small move to the positive side there. However, the NASDAQ is still struggling because of ASML. ASML is the first major chip stock to report earnings. It's a European company, and they did not do very well. We'll look at that, and I'll give you the trading levels in just a second, all right? But before we do that, we got to jump back to the charts here and take a look. And again, if we look at the charts here, we can clearly see if we flip over to the S&P daily chart, we're looking at these levels, right? So this is really important, guys. So let's take away this line in the sand here. This was your lower level. But remember, we've been talking about how the markets were facing a mammoth zone of resistance. 1 trend line, 2 trend lines, 3 trend lines. How, again, over here, this was your first trend line break. We then rallied up and we went right into the triple cross of major trendline resistance. And listen, the markets didn't collapse off of that. Sometimes in bull markets, markets don't collapse day one, right? Because there's so many buyers that are clamoring to get into the markets. Instead, the markets went sideways, floated up, kind of went sideways, and then we gapped up yesterday on the CPI data and that news that NVIDIA could sell its H20 chips to China. And then the sellers came in. Now, do we think retail was selling here? No, retail wasn't selling here. This was institutional dumping, folks. They were selling into good news. And one thing that I've learned in my 26 years of trading is that when you see good news hit a market, when good news comes out, NVIDIA being able to sell its chips, the semiconductors were up quite a bit yesterday. The CPI data was decent. Again, wasn't shockingly bad by any stretch. And even today, the PPI data doing pretty well. But when you see a market that opens higher and then reverses back down on good news, that is something that I pay attention to. It doesn't guarantee a top. There's no guarantees in trading or investing, but it certainly is a change in character from what we've seen in the markets. And that has to be taken into account. No doubt about that. All right, back to the charts. Now, the other thing I had on the chart initially was my line in the sand for this market. So here we have the low from April. This is the lowest point that the market has seen. Literally, if you go back, I mean, heck, we have to go all the way back to January of 2024 was the last time we saw a low. And interestingly enough, in April of 2025 is when we got down there. But if we stretch this trend line up, what we can see is yesterday we got our first daily close below this trend line. Now, remember, daily closes are good. It's a start, but it is not a confirmed breakdown. So what I'm looking for today is, do we have a lower close than yesterday on the S&P? Now, right now we're going to open higher, but let's watch the price action, okay? If we close below yesterday's low, then you have a confirmed breakdown. Now, let's talk about the difference between a non-confirmed breakdown versus a confirmed breakdown. And the difference is probability. So when you have a break below a line, I've seen many times where it's kind of a fake out by institutional money. They just want to kind of whip people out of the trade, get people to jump on the short side before they push it right back up above the line. I've seen it many, many times, folks. In fact, in this game plan, probably almost daily, we see an example of that. Now, once you confirm, the odds go from basically a non-confirmed breakdown is basically 50-50 to a confirmed breakdown makes it about an 80% chance that it's a real confirmed break, meaning that the odds strongly now favor a downside move in the market. All right. So again, these are little nuances that as a trader, I would get whipped out of trades all the time. It'd be like a close below a level or a close above a level. I'm like, oh, it closed above the level. It's a breakout. I mean, how many of us haven't done that in our trading careers or investing careers? And then all of a sudden it goes right back below and dumps out. And we're left holding the bag, right? So the confirmation signal, again, it's something I teach in the Winning Trader series, of the utmost importance. Okay, so let's go back to the charts here, guys. And we have a close below. We're going to open slightly higher today. Let's watch and see what happens here. Do we get back above this pink line here that I put in, which is your lowest point from April 7th to this low on June 23rd? And again, we finally closed on July 15th below this line. All right, now let's flip over to the NASDAQ. The NASDAQ, if we take a look at the QQQ here, the NASDAQ, again, is bubbling up against this longer-term key trend line here. It's a beautiful parallel here, as we can see, going back to the COVID low here, to these lows here, and then right to this high and this high. And again, notice yesterday we gapped above the parallel and we closed back below. All right, so again, same thing. They tried to fake you out. They got it above. A lot of people be like, oh, it's above the parallel. This market's going to rip. Oops, not so much. NASDAQ came in, basically closed flat yesterday. Now it looks like we've ticked to the slight green side on the QQQ today, the NASDAQ 100, on the back of this PPI data. So let's watch and see where this closes. But again, this is still resistance and has to be respected. Now, the reason why the tech stocks are doing a little bit weaker today, or are a little bit weaker, is because of this chart here. Take a look. This is ASML. I mentioned this before. This is a semiconductor chip stock out of Europe. All right, they reported this morning their earnings and revenues beat, but they said it is slowing down. The current quarter is slowing, so they're expecting a slowdown. And obviously, the markets react not to the current numbers, but the projections for the coming quarter. And so down it comes here. You can see down trading at the lows. It's down about 7.5% on the morning session. Now, as a trader, right away, I say, oh, it's down a lot. Let's look for where we can trade this in the live day trading room today. First level for me is 705.75. There's a gap fill right here, followed by this beautiful trend line, which starts over here. You could even extend it over to here, but right through these high pivots, area right in here, and that's around the 677 level. So listen, it looks like it's a long way away, but when it's a $700 stock, falling another 50 bucks is not a huge drop on this, and it very easily could do that. So keep that on your radar, guys. ASML, again, the first major chip stock here to report, and earnings are showing some weakness. Now, the bigger question I think we all have is, does ASML's numbers reflect a broader potential weakness in the chip sector? In general, ASML has had its problems in the past. That's why it's not at all-time highs. Going into this report, it was far away from those all-time highs. So again, I wouldn't jump to that conclusion that this is a bigger signal of overall weakness in the chip stocks or in the chip sector. But I will tell you one stock to watch, Taiwan Semi. Why? Why Taiwan Semi? Because TSM reports tomorrow morning, okay? Taiwan Semi reports tomorrow morning. The stock, again, you can see it double topped. Look at this, guys. Again, got above, back below, back above yesterday, slightly lower today. This stock is at all-time highs, and they report earnings tomorrow morning. Now, if they report weakness at all, if their guidance is not as good as Wall Street expects to justify all-time highs and $1 trillion plus valuation, then we're going to see the chip stocks really start to panic, or at least investors who are investing in the chip stocks. All right. So again, ASML, great drop. It's only affecting the chip stocks slightly today with basically flat to slight negative opens on a lot of the other chip stocks. But if Taiwan Semi says something bearish, watch out below on all the chip stocks. That would send ripple effects through the market. Okay. Now, one stock I want to just point out, guys, this is one of those great trend lines. We call them hidden trend lines because, again, most retail and most even institutional traders won't see them. But look at this trend line right here. Low to the low to the low, breaks down. And then what did it hit yesterday? What do we call that in this game plan? We call that a retrace to the scene of the crime, and it should get rejected off that level. This is AMD's chart. And again, the trend line here for rejection was 158.60. It hit it yesterday. Today, it is basically flattish on the day to open based on the ASML earnings. We'll see where it goes today. But again, good resistance level right there. Okay, a couple other things to go over. The US dollar today is trading slightly higher on the day. The dollar, again, you could argue the dollar strength maybe is a rotation to safe haven assets. But again, we've seen kind of a mixed bag on that. If anything, you were in this longer term downtrend and you've now broken above. So I do think the dollar has some upside here, but it is limited, right? I think we have to be honest with ourselves that the dollar dominance is going to slowly wane. The U.S. debt issue is not getting resolved. We have obviously other factors here playing into countries being more skeptical about holding only dollars longer term, wanting to diversify. So again, while the dollar can gain, and it probably gets back to about 100 on the DXY, I do think the longer term trend is now to the downside. Now, the 10-year yield had another update yesterday, kissing 4.5%. The PPI data today is taking a little bit of the sting off of that and bringing rates back in a tiny bit, which again is good. The markets do not want to see higher rates, right? The markets definitely do not want to see that. Couple other stocks in play. Goldman Sachs reported earnings this morning. The stock popping initially, then basically coming back in to only be slightly positive. Bank of America also reporting. The stock on Bank of America had fallen over the last week or so. So it's getting a small bounce on earnings. But again, these bank stocks, these financial firms, and we saw this on JP Morgan yesterday, they reported great earnings, but the valuations have gotten very lofty for these financial firms. Financial firms don't have crazy growth rates, right? They can't justify PE ratios of 30, 40, 50. And so when you get up in that range, at some point they have to come back in regardless of where rates are and what the Fed is doing. They just, again, the growth is slow and steady. And they print money, essentially. They make so much money. But again, they don't have the growth rate to justify a high PE stature. All right, Bitcoin. Let's talk a little Bitcoin here. So we had the topping tail yesterday or 2 days ago on Bitcoin. That, again, is a bearish reversal signal. It followed up with a down move yesterday. We did see the government kind of stall out. This week was supposed to be this amazing week of all this legislation being passed in Congress. And sure enough, at first pass, it essentially failed. So that's why you saw this pullback. But on a technical basis, this really raises the question about on the weekly chart, which is the one I've been watching, right? That's the one where I'm now focusing in on, because on the weekly, do we come back and close back below the trend line, right? So what we can see here, this is that weekly trend line I've talked to you guys about. It held up literally from 2017 through the bull market of 2021 to the high pivots of 2024 and early 2025. We closed above, but remember what we went over earlier in this game plan. We said, listen, a close above is great, but it could be an institutional kind of game where they kind of get everyone bullish, get people piling in, they stop out the shorts, then do they reverse it back below? So you got to see if you confirm on the weekly chart this week. Right now, if it closed here, it would not confirm. On the weekly, it must close above the high of last week. Notice how the low on the pullback took us back to that line. So the line so far has held. Let's watch and see if it holds the remainder of the week. into Sunday night's close on Bitcoin. Ethereum, on the other hand, and I commented on this on Ethereum yesterday, that Ethereum was strong because it was green yesterday when I looked at it, even though Bitcoin was red. And sure enough, we've seen a breakout that looks like on the daily chart it's going to confirm. This is a nice move on Ethereum, playing catch up to the rest of really to Bitcoin and the mammoth run. Now, the question is, how high can Ethereum go? Well, I mean, that's anyone's guess. Obviously, your major target is 4,100 up here, which would be double top your 52-week high. But there will be some stopping points along the way. The first level I'm going to really keep an eye on is around 3,450 to 3,500. This high pivot, kissed it here, kissed it here. That's the first level that will be of interest to me. And I do think it goes there probably in the next few days. But again, once it gets there, we have to evaluate and see, can it break through that? If it breaks through this high pivot at 37.35 would be your next level. And then finally that 4,100-ish range on Ethereum. All right, let's turn our attention to gold. Gold has been dancing right along this line. I did short a little gold yesterday, guys, and you guys know I'm a long-term big fan of gold. But the more you hammer on this line, the more likely we get a breakdown that confirms. And if we do, we should head back into this range here. So again, I figured, what the heck, let me jump on board with just a small position. Remember, I'm still net long gold because I have lots of gold long-term holdings. But on the shorter term as a swing trader, sure, I'll take that trade for a little breakdown in gold, try to get myself a few percentage points on the downside. Essentially what it does is it hedges my longer term position, which is net long, right? That's really what that ultimately does. All right, we'll keep an eye on that. Silver, again, we had that 39 hit. It reversed immediately. Now you're looking at support around $37 on silver. And again, if it breaks through there, we could go back to 34.50. Turning our attention to oil. Oil, oh, there you go. Oil starting to break down. For the last week or so, I've been saying, guys, this is a bear flag. How's it going to resolve itself? You guys can all answer that question if you've been watching the last few days. I said it's going to resolve itself. The probability-wise, as always, and it's always an odds game, right? Probability is that this pattern resolves itself to the downside, and oil, sure enough, is starting to break. Now, listen, remember, you still got to wait for a close with confirmation to really be sure it's breaking down, but the pattern is very bearish, so the odds definitely favor a confirmed breakdown, which eventually, I mean, you'll have stopping point right here around 63.75, but really eventually this goes to probably around 53 to 54 bucks on the downside. Lastly, natural gas, let's touch base on that. Nat gas continues to leg up here, slow and steady grinding. Resistance is still not hit yet. Resistance to me is going to be around 373 on natural gas. That should be first area where you could expect a pullback on natural gas. Again, notice this trend line and this trend line are parallel, which is awesome. So we'll have to watch and see. But again, that's your zone that you're looking for resistance to come into play. All right, one more check on the S&P in the pre-market. Let's just go back and check in on the futures here. The S&P futures, again, from that PPI data, we've really just consolidated, pulling back slightly. But again, markets on the S&P are net green after the PPI data came in very, very solid today, meaning basically lower across the board. Both core and regular CPI were all better than expected there. So again, to summarize, the key is watch that daily S&P level. We closed below it. Do we confirm? Okay, that's number one. And number two is let's watch the semiconductors going into tomorrow with Taiwan Semi. Taiwan Semi, ASML, okay, it's going to impact the semis today slightly, but it's really all about Taiwan Semi tomorrow morning. That will be the big barometer for the semiconductors, whether they can continue their run or they start to basically correct. All right, you guys have a great one. Thanks so much for tuning in. I'll see you soon.